Hi guys, welcome back to the ST Brand. Today you'll be getting this question answered: where you should invest your first $1,000. You know, I did a quick survey, and in this survey there were some standard answers and there were some very peculiar answers. And the standard answers were like shares, bonds, unit trusts, ETFs. I'll cover all of these for you, but there are also some weird answers such as first 1,000 cannot do anything, which is true and not true, because you have to start off with somewhere, and the first 1,000 is where you actually start off. That's why today's video is to help you address that. And another funny answer was you can actually buy Toto with that $1,000. I mean, that has to be not a serious answer, right? Because if you buy Toto and you strike, very often there are reports that winners in Toto without developing financial intelligence actually squander away that money. So you want to be an astute investor, you want to be someone who is financially savvy. So with that, I'll start the video. There are 7 possible key ideas, and the first one is actually the Singapore Savings Bond, which happens to be the lowest risk. Right now, if you want to find out a bit more about it, I've actually a full video up there that you can actually click on the link to learn exactly what it is about. But in a nutshell, it's actually a bond that's issued by the Singapore government, and it is actually risk-free. And in 2019, the interest rate for it is about 1.6 to 2%. But this bond actually has so much flexibility. You can use it for saving your emergency cash. You can actually use it for a very low-risk approach to investing. And the minimum for it is about $500. And all you need is just to have a CDP account, and you can actually go and ballot for it. The Singapore Savings Bond is actually issued every month, and you can definitely get allocations for it. And all you need is that CDP account, which is a central depository account. And if you want to find out more how to open it online, I've actually a full guide in the links below. So you can actually apply for your own account, because the subsequent methods, some of it also requires a CDP account. And the second key idea that I'd like to touch for you is actually the retail bond. A retail bond technically is a lower risk idea. It is very simply an investment in a company in its IOUs, its loans. So for example, a company like SIA, if it issues a loan structure, you can actually invest into it, and right now they've actually done so, and a 5-year investment is actually paying about 3% for the SIA retail bond. So decide for yourself whether retail bond is the right approach, but it's just very simply an idea that gives you a regular coupon, and it's a low risk instrument, and it requires you to have a CDP account and a brokerage account to actually start purchasing that retail bond. The third possible idea is actually in REITs, and REITs is actually real estate investment trust, whereby you actually own the property and you earn whenever tenants pay rent. And it's just a very simple idea, very fast, free idea. But having said that, REITs are typically of a higher risk because it trades on share market and it reacts like any usual share. Prices go up and down quite a bit, and according to market conditions. And I actually own REITs such as Suntec REIT, which owns Suntec City itself, whereby tenants actually pay rent, and any investor, if you invest into the same REIT, you also get income from tenants itself. So again, look for links above where I cover fully on this topic on REITs, because it's a possible idea for your first $1,000. Now I'd like to invite you to click on the like button below so that we can reach as many people as possible to educate them on financial ideas, and click on subscribe so that you'll get notified whenever I release a video for you on a financial topic and be a part of our community. So the fourth idea is to actually invest in the shares itself. And in Singapore, shares are traded in $100 lots. So if you have only $1,000, look for shares that are trading at $10 and below. If not, you run out of your $1,000. And I've actually invested in some shares, and a quick idea is actually in property developers. Not that they are definitely suitable for you, but that's where I've been investing myself. And I've actually bought into shares such as CDL, City Development, into UOL, into Roxy Pacific, and these are developers. They actually build residential properties and derive income from building properties itself. So look for companies in Singapore that are trading at less than $10, and you'll be able to use your first $1,000 and get invested into them. Again, buying into shares requires you to have a CDP account and a brokerage account. So if you need, the links are below. The fifth idea is to invest into an ETF, and ETF is actually an exchange traded fund. And exchange traded fund is very simply a basket of companies, a basket of shares. For example, the Singapore Index invests into blue chip companies such as DBS, such as Singtel, and in this basket, you actually get invested into everything that is listed, the bigger companies itself. And if you're new to investing, I definitely suggest investing into ETF more than investing in a share, simply because investing in ETF reduces your risk with diversification. And ETF is actually simply traded on the Singapore Exchange, and you can look out for the STI ETF. You can actually look out for even gold ETF, which trades on the gold prices itself. So again, ETF is a basket whereby you can actually get invested with $1,000 into many companies. So that definitely makes a lot more sense if you're a new investor. The 6 ideas to get invested through robo-advisors, I classify them after ETFs simply because they help you invest into many ETFs. They diversify for you even further. In Singapore, you can look to Auto Wealth, you can look to StashAway, you can look to SciFi, and these platforms actually recommend you portfolios based on your risk appetite. But the main thing is they can help you get started with a small investment amount, and it gives you a very simple passive approach when it comes to investing. The 7th idea is to invest into unit trusts, also known as mutual funds. And I've personally invested in unit trusts that actively invest into small cap shares, actively invest into emerging market bonds, because these are where I want the fund manager to actively buy into ideas that will generate returns. And a unit trust, to explain it, is very simply a vehicle whereby investors pool together in a fund and get invested. It can be into equities, it can be into bonds, or a mixture of both even, depending on the mandate of the fund itself. So unit trust has that benefit whereby if you're investing in small amounts, the charges are usually in terms of percentage. Unlike a share or unlike ETF whereby there's usually a minimum brokerage cost. So when you're investing in small amounts, unit trust can be a viable vehicle that you can consider, especially for your first $1,000. Now feel free to share this video with anyone that's also looking to start getting their first $1,000 invested. And if you have further questions, leave them in the comment section below. I'd like to help you address them personally. And again, some people say that contributing to CPF is also a possible idea, but CPF is illiquid, whereby your first $1,000, if it's contributed there, is not going to be able to withdraw for the next foreseeable future, unlike each of these 7 ideas. So if you're young, you're looking to get your monies grown, these 7 ideas are all solutions, but it depends again on your risk appetite, depends on your investment experience. So with that, I'll sign off. I'd like to hear from you with further questions. Leave them in the comment sections. Again, I'll see you in a future video. Take care and goodbye.